What's going on, guys? So I'm going to show you why I took SPY puts today. Um, they ran huge. I didn't catch the full move, but I caught a good percentage. And so let's get into it. So right here, you can see is market open, and the yellow lines are stronger levels than the purple lines. So I want to be aware of those levels. I want to be aware of all levels, but putting more emphasis on these levels, the yellow levels. And as you can see, pre-market, it was kind of rejecting this level and was pushing down. And then later in the day, you can see it was holding this other stronger yellow line level and eventually went up. And I actually did take calls at the end of the day for a quick scalp as I saw a pivot going on here. So these two strong levels, the 393.58 and 397.58, about, if we go on a higher time frame, you'll see why I marked these levels. So we are on the daily now, and where is that? We got the 393.58 level right here, and then the 397.58 level right there. Let's go to the 180 so you can see the 180 day so you can see better at why I chose these levels to watch out for. So you can see at this 393.58 level, it's cluster area, holding areas right here, rejecting right here, rejected right here. More cluster areas holding, rejected right here. Rejected right here, holding cluster area. If you guys don't know what a cluster area, check my TikTok out, but it's basically like the middle of where it's hitting like the body's end and the candlesticks the most. And you can see it held right here, holding right here. So that's why 393.58 is a very strong level, which I have marked. And then above is our other level, 397.58 about. And that's because, cluster area here, cluster area, it's holding. Rejected, cluster, it's holding right here. Another cluster area, holding right here, cluster area. So these are very major areas I want to be aware of. And then we have these purple secondary areas that I don't put as much emphasis on, but I also watch. So what do we see here? So it was rejecting that major level of 397.58. So I thought to myself, this is showing weakness, and I decided to take puts. So I took my contracts. Where did I take my contracts? Okay, so this original push down, I actually missed, and I wish I got in around here when I was crossing, where these candles are. I missed, but then I waited for the pullback up here, and then I wanted confirmation on this candle to push back down. And when it crossed this other candlestick, right here is where I entered for my contracts, with this level as my risk level. And it pushed down, then was a little choppy, pushed back up 2 times, but didn't break my risk level, guys. So I was still in. And then this eventually pushed down, and boom, I sold down here for a nice gain. And then you can see some chop, but eventually trended back down to here. But I'm not going to hold through this chop, guys, because the option contracts decay with time. So, where you sell right here, they could be worth maybe the same amount over here after going through all this chop. So that is why I took it. It was showing weakness off this strong level. It was crossing these other weaker levels. And as predicted, it went from one strong level to the other. And then it started holding this strong level. End of the day, I noticed. So I was watching it hold this level, and I actually got in for contracts when it started holding this level again and pushing above. So I got in contracts here, sold right here. Then it pulled back. I missed out on this, whatever. I caught a good percentage right here, but this did eventually end up pushing higher end of the day. But I wasn't willing to hold because hold longer. I wanted to be out of the call contracts quick because if you look at the overall trend, it's going down. You see, so I didn't want to fight the trend because it's, I like to go with the trend. So you can see going down overall on the day, very weak. So I didn't want to fight the trend, guys. So when I do fight the trend, I'm very careful. So just to put a little more emphasis on things, I'm going to put my study set on. And this might be difficult for new traders to understand because it's a lot on the table. I don't usually use EMAs, SMAs, but I do occasionally now with option trading, just as a confluence. I really don't need them, but they're there. So let me show you what I was seeing. So my favorite is the VWAP, which is this pink line, and then the lower band VWAP, which is the yellow line, and the upper band VWAP, which is this different shaded pink line. So here's where it was rejecting. I was showing you guys market open on rejecting this level and start to go down. But also, I like to watch the upper and lower bands of the VWAP. So when it gets close to this upper band, I'm looking for it to reject and come back down. When it gets to the bottom of this lower band of VWAP, I'm looking for it to hold and go up. And as you can see, it does that often. So that was just more confluence that, it could be coming down because it's high up on the upper band VWAP. As you can see up here, was high up on the upper band VWAP started coming down. So that's what I look for. It also crossed the center VWAP. So when it crosses center VWAP, it often continues to go back down. Then when it comes back to the VWAP, it often rejects. And you see it comes back down. Right here, cross VWAP started going up, comes back down, holds, goes, and comes back down, holds. So that's how VWAP works. What are these other levels I have here? Well, we have the 9 EMA, which is this gray line. So I like to see it, hold this line trending up and hold the line trending down. So it cracked below and started staying below. Then it started cracking above and started holding above the 9 EMA right here. So I just use that as trend. Then you get the 20 EMA, 20 SMA, sorry. And that's just to see where, kind of like the 9 EMA, if it, can hold that level. But these EMAs, SMAs are not anywhere as important as vertical levels, guys. And then you have the 50 SMA. The 50 EMA, which is the white line, which I kind of look at higher time frames to look at. But then lastly, you got the 200 EMA, which I do look at this one quite often. And as you can see, this is why I have more confluence of this going down the overall trend because I use the 200 EMA strictly on the daily, and you can see we were rejecting the 200 MA and hinting weakness on the downside because that's how I use the 200 EMA, guys. That's how everyone typically uses it. If it comes up to it, it's likely to reject. If it crosses, it's likely to trend above. If it comes back down, it's likely to bounce. EMAs are all the different EMAs are used very similar. So just confluence. My favorite one is VWAP, like I showed you guys. Basically the upper band, the lower band holding. If it hits the upper band, I'm looking for it to come back down. If it hits the lower band, I'm looking for it to bounce back up. And then you get the crossovers. It can bounce off the middle VWAP, push back down, or if it crosses over, likely to keep crossing. So it's just confluence, guys. I use time and sales and level two when I'm watching. But like I said, it's really just the levels. You want to look for the strong levels, the yellow dash lines, and you want to mark short-term levels as well and be aware of them. As you can see, why did I mark these levels? Because they hold the end of candlesticks, bodies, or run through cluster areas. You can see the holds. So that's it for today's video, guys. That is why I took option put contracts on the day and why I took some call contracts end of the day. So stay tuned for the next video. Comment, like, subscribe, check out all my platforms. I give a ton of free information. Thank you, guys.